This conversation is really going to be looking at payments developments in emerging markets, and in particular trying to lift lessons to ask the question, what could South Africa learn from some of these advancements in emerging markets? My panelists are standing by, and they're bringing unique insights from more broadly off the continent, unique insights from Asia as well as South America. I'm going to invite them to kindly please join me on stage. Might I please welcome Stephen Mara, who is the founder and chairperson of the FinTech Institute. And prior to this, Stephen was in charge of the National Payment System Division at the Central Bank of Kenya. So, Stephen, you can come on. Let's give him a big round of applause. He's hesitating behind me. Please take your seat. And ladies and gentlemen, I kind of like the walk-in with the arms up. It's very celebratory. Maybe we can keep it going. So Radhika, you're up next. Let's give Radhika a big round of applause. Radhika Sihin is the head of policy at Elevandi, which of course is based in Singapore, but beautifully, she also of course has roots in South Africa, having worked at the SARB and National Treasury, but is able to give us that Asian lens in the conversation. And last but not least is Harish Natarajan. Let's give Harish a big round of applause. Thank you so much, Harish, for being here. And what Harish does is that he leads the global team at the World Bank that works on financial inclusion, payments, and markets infrastructure. So there's your seat. Thank you very much, Harish. Let's all take a seat. And one of the things I'd like to do before I actually get to the panel is to get your take on this conversation. So we're going to do a quick Slido at this point. The Slido is going to come up. It's going to come up on your screens, on these big screens, and you're going to be able to take a quick picture of it in order for you to get there. There you go. And the question that is going to come up on the Slido is going to prompt you to please put in a response in one word. There's the question. It says, in the past 3 to 5 years, what have you broadly observed to be key developments in the payments landscape? So, ladies and gentlemen, we're asking for the answer of this entire panel from you, and then all we need to do is just discuss what you've said, honestly. So let's have a look. So there are a few people in the room that are saying, well, what I'm seeing is fragmentation, it's speed, it's the ISO 20022 that the governor mentioned as well. And digitization is coming through as a really big theme, as well as digital payments. And that screen will continue to move in a number of ways. What I'm interested in is a way of just opening this conversation is your gut reaction to that. And maybe, Stephen, let me start off with you. When you look at that, where the majority of the room is saying, actually, we think that the key developments in the payments landscape has been digital payments, it has been digitization. How do you respond to that?
Good morning. Coming from Africa, it is digital because of mobile. Mm-hmm. And it's digital because of mobile, because even communication before was landlines, and now we have mobile. And everywhere you walk, even you walk to this mall, what you'll see, you see mobile.
Yeah.
Combine mobile with money, you have the highest level of digital. So it's digital, and especially in Africa, because of the use of technology in the sense of mobile.
I love that, Stephen. It's a nice, concise, but really focused response. Combination of mobile and money has really been a driving force on the continent. But what I'm hearing you saying is that is something we've got to be focusing on. How do we consistently converge our mobile capability on the continent as we think about the future of the payments landscape? Radhika, let me bring your voice in as you look at that screen. What is it that stands out for you? And maybe even what might surprise you?
So Nazi, I think definitely digital payments is on the rise in Asia as well, particularly real-time payments, digital wallets, standardized QR codes, contactless payments. What I can say that in the last 3 to 5 years, this has simply accelerated in Asia, and certainly it's been catalyzed by the pandemic. So while those building blocks were there prior to the pandemic, when the pandemic happened, from the sheer need of consumers not to have any social contact or even touch cash, for that matter, the adoption rates of digital payments in Asia just skyrocketed. And for that reason, that is pretty prevalent, particularly in the Southeast Asian countries.
I'm going to pause you there because I think it's a really good on-ramp onto the conversation that we're going to have, and I think it builds on some of the insights from Governor as well, as you talk about a shock to the system that actually led to an acceleration in adoption rates. And of course, the question that comes to me is, how do we deepen those adoption rates in the absence of shocks? And also, how do we build systems that are resilient to shocks? And I think that's probably something we're going to be able to unpack as well. Let me bring your voice in here, Harish. What surprises you about this word cloud that you're seeing on your screen?
A couple of things. Of course, I think this is a pretty informed audience here.
Sure.
So I think it is good to see all the different kind of the different underlying issues and underlying developments being captured here. But it's also interesting to see kind of the digital payments word kind of zooming out of all these different words. And that shows the focus on the experience of the customer rather than what is underneath it. So I think what people are focusing on is that it was digital. And in that sense, I think it connotes a lot of things. Digital connotes a lot of things. So that is that's what everybody is focusing on, not the underlying kind of various technological developments, which are, of course, well captured here.
I think you bring a very interesting layer to this, and this is the idea of the centrality of the customer. And I go back to the UPI and the PIX examples that the governor spoke about to say, to what extent are we thinking, for example, in South Africa, about the South African in the taxi trying to get to work and the extent to which they could use a digital payment in order to pay their taxi fare. It's a huge part of our culture, and I think a lot of people would be familiar with the 4-4 and counting the money and moving it forward. What would that look like in the future of a payment system that is more digital? So thank you very much, ladies and gentlemen, for sharing that with us. It's going to be an important platform of which we get into the deep, broader conversation. Where I want to start is maybe just to start off with you, Harish. If you look at, from your global perspective of sitting and leading the team at the World Bank around financial inclusion, looking at the evolution of payments, what role do you see technology playing in payment systems, in particular in emerging markets? We've heard 2 examples of what's happening in India, what's happening in Brazil. But do you have any other examples that you think these are examples to watch because they are really exciting and they are shaping potentially what could be happening in the rest of the world?
Thank you. So let me take let me step back a little bit, and then I'll come back to the specific question you're raising. Of course, the technology and payments have been very closely intertwined. Payments has been amongst the first adopters of any new technology which comes out, going back from the time of metal coins to paper money. And then also, right after the telegraph was invented, people found a way of using telegraph for money transfer. So I think payments and technology are pretty closely intertwined. If I look at technology, I look at it from the perspective of what it can enable.
Sure.
And what and also how it shapes the industry. So from my analysis and my team's analysis, we looked at 3 key dimensions in which payments has been impacted by technology. The first one is the relationship between payments account and the form of money.
Sure.
So if you look at it, the very first waves of digital and digitization was in the form of people using internet banking and mobile banking to access their existing bank account. So this did not change the form of money. It did not change the institution maintaining the account, and so that relationship did not change. Then came the concept of prepaid technology, prepaid accounts. So this basically introduced new players into the ecosystem. It manifested in the form of e-money, mobile money, but still there was an account, there was an institution providing the account, institution maintaining an account. But of course, what it did is that it segregated the issue of money being held in banks, which is then used to intermediate and give loans and so on. So it reduced the regulatory requirements to enter the payments market. So it opened the market to new players to come in. And then the third one is where the entity which is offering the payment service
Yeah.
is not necessarily the entity maintaining the account. So this is the world of open banking and open finance, where you see third-party payment initiation. This is also the world of card tokenization in the form of the Apple Watch payments, which the governor was mentioning earlier. And this is also the world of the banking as a service and so on. So here you are having payment service standing out as a separate service from the institution maintaining the account. And then the fourth one, which we are currently, I think, in the midst of, is about saying whether you really need an account to do a payment. And this is the world of crypto assets.
Yeah.
Of course, technology is pulling you in a different direction, but the public policy objectives and the regulatory requirements might not necessarily allow you to go fully into the way, but it is a technological development which is allowing you to make a payment without maintaining an account. So that is, I think, to be looked at. The second area is on processing, how you initiate your payment, what is the technology used to process it. So all the QR codes, fast payments, I would put it in that category. But also this point about decentralization, the capability to minimize the need of a central infrastructure. I think that is also which the technology is indicating. And the last one, which is often underappreciated, is the impact on the business model.
Okay.
So the way the revenues being made in the payments industry is shifting because of technology. Revenues being made in the adjacent services through data monetization and so on. And I think people will talk about in the course of the event on how AI is also shaping that. So I think those are the three things I will point out. And in terms of the different experiences across the world, I think the initial wave of a lot of the developments you talked about, like UPI and PIX, has been on person-to-person payments.
Sure.
And we are now seeing it penetrating quite significantly into the merchant-to-merchant category. And that has significant implications because for the very first time, you have a true alternative to card payments for an in-person merchant transaction. Earlier, the only option was cards.
Yeah.
And mobile money using the USSD works, but then the user experience is a little clunkier. And now with the fast payment systems coming in, that has become a very big point. And we are seeing UPI and PIX and other such services, person-to-merchant payments is actually now more than 50% of the total transactions. So it has really moved away from the person-to-person side. And then I think the other development which is worth noting is payments is being seen as a platform for further development of the digital economy. Like the way people talked about TCP/IP and the simple mail transfer protocol as technology layers on which the internet was built. People are talking about digital payments, ID and data exchange, or the digital public infrastructure as the platform on which further the next stage of the internet or the next stage of the digital economy will be built. So that would be my response to your question.
And I've allowed, Harish, for you to really take the time to land those points because I think, this entire conversation is really trying to go through the lens of understanding those technological changes and to see the different horizons is quite important and where we find ourselves in the opportunity that is evident. And so as I come to our next speakers, I'm keen to really begin to tap into some examples and some of the excitement and where it comes from. So maybe, Radhika, let me come to you because oftentimes when you talk about technology today, I've just done it, we interchange that with AI very quickly. So I want to get that elephant out of the way and really speak to AI very quickly. We're seeing the prevalence of AI in Asia. It's really taken off in the payment system. When you consider some of the trends that are being driven by AI, where do you see the opportunity for South Africa to learn some lessons, pick those that are relevant as we think about the future of the payment system?
So Nazi, yes, AI, particularly in Asia, it being a very tech-savvy region just generally, it's actually been quickly adopted to some extent. So I'm going to answer this a little bit with some use cases, which I think I will try and bring back to South Africa. So we see at least, firstly, AI being used quite a lot in the prevention and detection of fraud. And I want to caveat that with saying that generally, if you are increasing digital payments, the chances of frauds and scams also increase at the same time. We've seen that globally, it is a trend. The use of AI in preventing and detecting fraud actually does bring a level of, extra level of security into the space. And where I see it relevant for South Africa, because for me, the Asian market is different to the African market. In Asia, there's a tendency to look at the convenience of the customer. Whereas in Africa, we're still thinking a lot about access to finance.
Sure.
But even in access to finance, the need to create trust with your customer around not having frauds and scams is really important. So I see AI playing a very big role there. The second use case I think that's also quite important is around credit decisioning. Now, in the past, we have a history of people not having access to credit, whether it's because you're a woman, a person of color, you're in the lower LSMs, whatever the case might be. AI is kind of revolutionizing that to some extent, and China is a very good example of that, where it uses not only traditional financial services data, but it also uses alternative data. And what do I mean by alternative data? That could be how you pay your municipal bills, could be social media, it could be your browsing history, which you might worry about privacy, but just other data that creates a holistic picture of the person or the SME and their ability to pay back loans at credit. And from a financial inclusion perspective, I think SME financing has always been a real big issue, and has been talked about for a very long time. I think Harish and I were just saying last night that SME financing in particular has really been a big issue. I think to some extent AI can actually start to resolve that. And in bringing this data together, it's able to create a more bespoke solution for the SME. So it may not fit into your traditional little box that financial institutions think about. It might be just a different way they can pay back, and maybe not consistently, but they can pay it back. And that brings me to the third use case, which I think about is bespoke solutions for consumers. Again, bringing it back to South Africa, financial inclusion at the lower LSMs. You can imagine that people don't necessarily fit into a middle-class customer box. So you need to think about, how can you use their history, whether it is that they save differently, they pay back differently, they consume differently, and use that to be able to provide solutions, still bringing them into the fold, even though they are very different.
So final one?
The final one, which I'm pretty excited about, I must say, is actually the use of voice payments.
Voice payments.
And I say this again because I'm bringing it back to the financial inclusion space. And this is the ability to use language models. You can actually converse with consumers in their vernacular. So if they are illiterate, if they don't like text, if they're scared of technology, a simple interface with a vernacular language, and you're able to actually help them do payments or transfers, etc., you can bring them this way. So you can imagine being comfortable in your own language around your money. You will feel far more trusting in technology.
Radhika, what I've loved about your response is I think there's such a clear golden thread in they being able to drive inclusion.
Yes.
Whether it is the voice payments, whether it's about pulling SMMEs through financing opportunities, whether it's alternative credit models that allow us to strip away some of the biases that might keep others outside of finance. And of course, you also started off by saying AI has been really a standout in terms of detection and prevention, which we'll talk about tomorrow when we shift our focus to safety, access issues, and sustainability issues. But I think this is really, really interesting. But maybe, Stephen, I'm going to put a headache on your table a little bit, because if I'm hearing about all the exciting things that Harish is talking about and what's possible and all the exciting things that Radhika is talking about, and I go back to what I saw on the screen, regulation was a small little word somewhere in the corner. Certainly not regulation, certainly not enabling the developments in the payment system according to what the audience has shared. So the question to you is, Do we have examples coming out of emerging markets, coming out of Kenya, other parts of Africa, where regulators have been able to get the balance right between innovation and access and safety and all of these other things that we want to see in payments?
Thank you for that question. Actually, giving me 2 minutes to discuss that is a disgrace because this is something I can talk the whole day. I want to say there are 3 C's
Yeah.
that you have to pay attention to, and I'm talking to regulators here. C number 1 is the capacity of the provider. C number 2 is the capacity of the regulator. And C number 3 is the capacity of the user, the customer. Those 3 C's bring to me the practical example. I have one of my colleagues here from Central Bank of Kenya, Mr. Abuga. We in Kenya nurtured mobile money for more than 7 years before we wrote the regulations.
Sure.
So where regulation is being written here, the problem with us is the capacity of the regulator. And I put it as a number 1. Because the capacity of the regulator, who we are, has traditionally been to deal with commercial banks.
Yes.
And every application that shows its face in a central bank is treated as you have to apply as a commercial bank. Why? Because our thinking around financial services was always about commercial banking. And we had lived for so many years under that model that we could never see anything else other than commercial banking offering services. And we are not saying commercial banks are not innovative. They are. But what they do is what we call additive. And they have been able to do additive even up to today. However, the capacity to deal with non-banks, players who are out there coming up with new ideas, like she's saying, AI is not coming from the biggest of companies. AI is coming from all over. And for that reason, the entry point to dealing with this balancing is an entry point of dealing with the capacity to appreciate a non-bank. Now, when you are dealing with a non-bank, the traditional risks, and for a regulator like us, the traditional risks that you have do not change. They will remain. It's how you deal with them that matters. And traditional risks in especially payment systems are not the same as the traditional risks in banking. So no innovator is coming to you to do banking. They are coming there to do payments. And our journey in Kenya was a journey of M-Pesa, which was purely dealing with payment service provision. We were not licensing them to do banking. And up to today, they don't do banking. Banking is left to the banks because the risk that the banks can carry, these non-banks cannot carry. So one of the other things is your appreciation of the risk magnitude. The risk magnitude that is brought on the table is not the same. And that's why I want to tell, and the audience here is an audience that is familiar with this subject, the various risks that we deal with in credit, in payment systems, are basically legal, credit, liquidity, settlement, operational. Those are the risks that are there. And they are not changing, by the way. Even if we are talking about innovation, those are not changing. How you deal with them is what changes. So a non-bank player, and I want to give you the example of the MNOs. When an MNO comes to you, you know they have infrastructure. I used to ask people in Kenya, and you're telling me about safety. They would say that, oh, when mobile money starts being used in this country, money will be lost. And I used to ask them, when somebody sends an SMS to you, and I'm sending an SMS to Radhika here, can it go to somebody else? Have you ever had an SMS losing its way and going to somebody else? The only way it can go to somebody else is if you make a mistake. Otherwise, if you are sending money through the SMS platform, the technology is there.
But it speaks to the question of trust.
Yeah.
I think that's the issue is trust, and I think I heard Governor speaking to it as well. How do we build the capacity to trust?
Excellent question. The institutions that you have been used to regulating are banks who you know about their trust. And don't forget, even those banks, occasionally, they bring global financial crisis. So the trust level can also go down. No wonder we have Bitcoins of this world. They came because of that failure of that trust.
Yeah.
So, but when you are dealing with the nurturing we did with the MNO, we nurtured them by working with them. And the example I give here is that, and when I look at the audience here, I realize many of you must have had the first child. Yes, the experience of a mother.
In other words, you're saying we're old in the audience.
I'm not talking about how many children. I'm talking about the first child. And I'm saying, when you are a new mother, what you do with a baby is exactly what you are going to do with an unbanked player. They don't know about these risks. You are the one who is going to nurture them and walk with them through these risks. And the way you deal with the various business cases that come to you. The first one we got was send money home.
Yeah.
The way we dealt with that helped us move on to the next stage. So the example I'm giving us here is an example of the way you nurture a child. You start with these institutions fostering confidence.
Yes.
And the role of the regulator, the role of the central bank, is to foster confidence such that if there are questions in the market, if they're asking, is this service trustworthy?
Yeah.
You are the one to come in. You remember when, for example, we started M-Pesa, one of our ministers questioned whether we have really looked at everything and we were required to do an audit.
Yeah.
The letter we sent to the market saying that the central bank is on top of the risks meant that we fostered confidence.
So, Stephen, I'm going to pause you there because I think that's a brilliant response and a lived experience that comes out of Africa. I want to do two things. I want to go to Harish because you've opened up the question of cross-border trade. You've opened up the reality of remittances, which are very real for us on the continent. But I also want to say to the audience, at this point, you can begin to start pressing your consoles if there's a burning question on that's coming from your table. I'll be able to see if there are questions, and I want to bring your voice in very quickly as I go to the second round of questions. But I see Radhika wants to jump in and say something, so let me give you an opportunity before I go to...
It's fine to let Harish, but I also wanted to share a little bit about the cross... So we're talking about remittances.
Yes.
I mean, 2 points. So one is... even in that context, AI is quite useful.
Sure.
So AI can actually optimize currency fluctuations, and also AI models can take over back office operations like AML, CFT, fraud protection, as I mentioned. And for that reason, it can bring down the cost of remittances, which in Africa is a big deal. We've always been complaining about how high the cost of remittances. So I think to some extent, even there's room to explore how AI can support that. And then in terms of taking it back to an Asia context, we talked a little bit about real-time payments. So I don't know if you know, but one of the big examples that are coming out of Asia around cross-border real-time payments is where countries are doing bilateral agreements to be able to use their real-time payments in each other's country. So a good example is Singapore with its Pay Now domestic real-time payments and Thailand with Prompt Pay. The countries have come together and have agreed that they can use each other's real-time payment systems. So that means as a Singaporean, I can go to Thailand. I stay on my domestic platform. I can do P2M there. I can buy from merchants. And the transaction happens in under less than 30 seconds, and it's extremely inexpensive. So that is an innovation that I haven't really seen in Africa, but definitely that is something that's happening between Thailand, Malaysia, Singapore, and India.
And I love that you've brought that example in because, Harish, I really want perhaps for us to expand the basket of what Radhika has shared with us. She speaks about an AI that has the ability to reduce the cost of remittances, a tick for Africa for sure. She talks about bilateral agreements for real-time payments. We know that We've got the African Continental Free Trade Agreement, so we want to see more of that. But remittances, because we are a mobile people, are very important to us. When you look at those particular trends that are specific to the African continent, are there payments, modalities or mechanisms that you think could really further enable our trade ambitions, further enable our need to move money across borders?
Yes, before I respond, just a very quick point. You
Sure.
were earlier asking me about technology. I think, and Stephen was talking about the capacity of regulators. I think technology also improves the capacity of regulators to regulate the market. Now, in terms of the cross-border point, I think a lot of people focus on remittances for cross-border. But I think there is an ignored part of cross-border payments, which is the freelance worker who's working who's contributing to the digital, who's contributing to the digital economy, and he or she doesn't have a way to receive the money back, because they don't have access to things like PayPal and so on. So I think they are not being served. Then there are small businesses who want to use cloud, use AI models to improve their business and reach a wider audience, and they are not able to receive payments from clientele abroad, because their banks and their payment service providers are not connected to the cross-border payments ecosystem.
Yeah.
So I think there is a segment in emerging markets, and I think it is larger in emerging markets than advanced economies
Sure.
who are not being served by the cross-border payments. Remittances is certainly a problem, but
Yeah.
remittances, at least there are providers who are trying to provide solutions. It is costly, cost can be reduced, but it is not an unserved market, whereas what I'm talking about is unserved completely. Right? So I think we need to make that distinction. Very clearly, there's a very specific business model which was evolved for serving remittances. Very specialized players like Mukurus and Western Unions and the like. But they are fundamentally working on them as an entity replacing funds on the receiving side, and on the sending side, they're collecting the money. And they are figuring out a way to convert it, and they are disbursing with the prepaid funds they have already placed in the country. And there are cash on both sides.
Yeah.
That adds to the cost. And then there's a cost related to keeping the money in the destination country. Then there are foreign exchange issues, because the time they keep the money, there's a different rate, and then the day on which the transaction is executed, it's a different rate. So they have to build the buffer for that in the pricing they charge. So as a result, the cash-based remittances and the current modality, it is expensive. And the global average is somewhere around 6.2%. And for Africa, for sub-Saharan Africa, it is 2 percentage points higher. So it is 8.3%. So clearly there's a big increase. And in my understanding, in our analysis, is showing that it is primarily because of cash dominance, and then also the foreign exchange margins for transactions being remittances coming into Africa. It is at least 1 percentage point higher in terms of the foreign exchange margins. So now, across the world, we are seeing different efforts to address the cross-border payments problems. One of them is clearly more use of digital on both sides to initiate the remittance of cross-border payments digitally and receive it digitally, so that way you cut the cash infrastructure cost, but you still are stuck with the foreign exchange margin and the cost related to the placing the funds ahead of time. And for that, there are different modalities being designed to basically shorten the chain, to be able to move it faster. So essentially, the direction is to create some kind of a regional platforms or global platforms. And there are colleagues tomorrow who will talk about the different examples of that. Of course, it is starting off as bilateral linkages between different countries. But can become
multilateral.
But over a period of time, they're going in the direction of multilateral. And you will hear good examples of that tomorrow. And there are, Africa, I think, is very uniquely placed because there are regional economic groups like SADC, East Africa Community, Western African Monetary Zone, then of course the Africa Union, and then the Continental Free Trade Agreement. So there are enough institutional structures which can be leveraged to build the cross-border payment systems. And there are already systems existing in SADC in particular, the SADC RTGS system and the TCIB for the regional fast payment system. I think the issue is more on the regulation in the respective countries to allow the non-bank players to participate. And then also, I think, a more general push from society
Yeah.
to lower the cost of cross-border payments. And one particular point, and I will conclude with that, is in Africa, mobile money is pretty big in terms of the experience of users. But the regulatory, in a way, compromise which was stuck when mobile money was allowed was that mobile money will be used only for domestic payments.
Right.
And there was a particular cap which was put on payments and the amount you can hold. And that is no longer tenable because it has become so big now, and the need for cross-border payments is so high and the digital is so high. I think you will have to allow mobile money to process cross-border payments. Of course, with that, regulation will have to evolve. More controls will have to be placed because the AML CFT risks of cross-border are significantly higher than just domestic. So there will have to be proper risk management measures. But I think the mobile money providers will have to be allowed to participate in the cross-border payment systems. And we are already seeing some aggregators coming out of Africa who are connecting some of the big providers globally to the mobile money providers. I'm talking about the likes of MFS Africa and so on, but they are only one direction of putting money into Africa.
Right.
But there also has to be a way for Africans to be able to pay small businesses and freelance workers, and more work has to be done on that.
So, and I'm pretty sure Stephen has some views around some of the domestic caps that you raise and the potential of mobile money. Stephen, I want to talk to you about that. I also want to talk to you about fintech players in particular, because you spoke about non-bank entities as part of the ecosystem we have to think about. But I want to go to table 8 first. So if you just give me 2 seconds to go to table 8. Table 8. I have somebody who would like to contribute to the conversation. Would you please ask your question? So put your microphone on, please introduce yourself. I can see the green light. Just a quick introduction, and let us know how you'd like to contribute.
My name is Zintle Mgomezulu, and I am from the FSCA. Quite an interesting conversation this morning, especially with regards to AI. And I'm just hoping that one of my C's could be a possible C's that could be added on to the capacity conversation. And basically, it is with regards to monetary capacity. And this question is coming from the fact that the adoption of AI, through the various engagements with various stakeholders, was that the adoption of AI comes with a lot of risks that are quite a monetary risk to some of the stakeholders. For example, if you're looking at the cost of data breaches, which has reputational damage as well. So when I'm talking about monetary capacity, I just want to know from the panel, what are the conversations with regards to that, and how can these companies that are wanting to adopt the AI be possibly assisted when looking at the monetary aspect and the various costs? And then second to that question as well is that, the adoption of AI should basically implement human skills. And I think one of the disruptions, or what sort of slows down the adoption of AI, is the replacement of human skills. And with that being said, is that a possible disruption that has been noted, for example, in Asia and in all the other countries? And does it contribute to the slow rate of actually adopting AI, taking into account the advantages of actually adopting AI?
Thank you, Zintle. I think fantastic question. So you brought the C's. Now there's an extra C that is coming from Zintle. So you'll have to respond to some of that, and then I'll come to the AI part as well. But before we go to Zintle's question, because I'm going to bring it to you, just firstly, Stephen, talk to us a little bit about traditional financial institutions. You spoke about them needing the capacity to engage with non-bank entities. I want to replace that with fintech companies in particular. Are you seeing any collaboration models that are interesting, worth watching, that are really going to be shaping payment systems, potentially for South Africa, but on the continent as well?
Thank you. There is a tendency to see things as if they are new, yet they are very old.
Sure.
Providers like Visa, MasterCard, SWIFT, all those have been fintechs. So fintech is new. The only thing that Radhika mentioned here, which is important, is the pace at which technology is changing. It's moving much faster than it was before. And during COVID, we realized that it moved even much faster. People who are not digitized became much more digitized.
Yeah.
So the issue of fintechs coming to complement what banks do has been with us for a very long time. And if I ask all the commercial banks here, how have you been dealing with Visa and MasterCard? And they do cross-border every day and everywhere. If I want to withdraw money here, I withdraw money with my cards. So these fintechs that we are talking about have been there because they can be able to bring on board the safeties that are necessary. And if you ask Visa and MasterCard how long it has taken them to come up with the interfaces that they interface with other commercial banks, they have been able to do that across the world. SWIFT the same.
Yeah.
Now, but there's new ones that are coming in our context now in, for example, Africa. When we did some study with AFI on what are the fintechs in Africa, basically they are e-wallets.
Yeah.
Basically in Africa we are dealing with e-wallet providers. Now who are the major e-wallet providers? We are talking about Safaricom in Kenya or MTN in Rwanda. They are the ones who are doing fintech work. At the very beginning, commercial banks used to see the fintechs as competitors.
Yeah.
Until they realize these are not competitors. These, if we collaborate with them, will make our life very easy. In which case, the combination of mobile money with commercial banking is what has driven more of the deposits to be mobilized through the mobile networks, and they find their way into the commercial banks.
Yeah.
So it became now more of a complementary relationship. Now, when you are dealing with fintech integrations of that nature, the interfaces tend to have a lot of risks. Most of the risks that we have seen are seen at the interfaces. The APIs, they
Yeah.
bring in a lot of risks. So when you are now dealing with two players coming together, the one thing you need to be very, very careful about is the responsibilities. How are the responsibilities shared? Who takes what responsibility? If you don't do that properly, those models tend to fail. But if you do it properly, I want to give the example of Mshwari
Yeah.
in Kenya. Mshwari was offered by NCBA. NCBA had less than 100,000 customers over its more than 40 years of work in Kenya. But when they partnered with Safaricom M-Pesa, NCBA today is the largest retail bank provider in Kenya because you can now onboard the clients through the M-Pesa platform. So you are now able to onboard remotely, and
Yeah.
within a very short time,
Yeah.
you have very many customers. So the ecosystem depends very much on the way you do something very important, the way you write the legal instruments. The legal instrument combining the two
Yeah.
is supposed to be done very carefully so that the responsibilities are spelled out very well. And the other most important thing there is the one to deal with consumer protection.
Sure.
Most of these fintechs are giving us quite a bit of challenges when it comes to consumer protection because the fintechs are not physical. And therefore, if you are dealing with them and you have a problem, where do you go? And we have seen this, for example,
Yeah.
in a product like Uber. If you lose money or you get some problem with Uber, try to solve that problem. It's very easy to get Uber, but if you pay it to the wrong customer and what have you, try to get back your money. You'll find that the consumer protections there are lacking.
So I think it brings Zinhle's second question about the capacity to monitor using AI to you, Radhika. But Stephen, I want one line responding to Harish. Mobile money with domestic caps, is that something that is holding the payments landscape back?
Thank you. The way he took it through makes me now discuss the real case that we have in Kenya.
One line.
First of all, one line. First of all, we capped it because we didn't believe that the agents that were providing the services could handle a lot of money.
Yeah.
But after time, that cap was removed. So today, the cap is no longer an issue.
Okay.
Because we have been able
Sure.
to deal with the issues that were there before. The agents could not handle, but today you can cash from a bank.
Okay. So I've got 9.5 minutes left. I would love to have another table put their microphone on as I go to Radhika. I'll see it up here. So if you have a question, please let me know. I'll also take a comment as long as it's short, sharp, concise, and to the point. Radhika, let's bring Zinhle's question to you. Zinhle is like, okay, are we not missing another C? And that is the capacity to actually monitor. And is there an opportunity to really deploy AI more meaningfully here? You did mention, detection and prevention as one of the things that we could look at, but I think it's an invitation for Zinhle for you to double click on that for us.
Right. So I also want to say that I didn't get a chance to say this before, but AI is not a silver bullet.
Sure.
Right. It is an evolving technology, and actually we just at the start of it in many respects. So there is a lot of challenges involved, particularly for regulators and supervisors. It can be an absolute black box. I heard last week when I was at the GPFI event that there's only a handful of skilled coders and practitioners in AI, a handful. And then, this technology is being deployed worldwide. So I can imagine that regulators are definitely going to struggle to have capacity to monitor and understand the risks of AI in the financial system.
Yeah.
So I'm not going to say there is an answer right now. I think it does require regulators to be proactive and start building the capacity from now to be able, because this is not going anywhere. It's here. It's just going to continue to evolve. And I think the one other area that is concerning, we haven't seen a lot of AI regulation
Sure.
in Africa. What we've seen is Europe at the forefront of trying to regulate AI. And in many respects, they are looking at it from the consumer protection
Sure.
side, and they call it a humanitarian lens. So in the main humanitarian lens, there still needs to be a humanitarian element in deploying this so that, the technology is not the be-all and end-all of the decision-making, for example.
Yeah.
So I think there's, I do think it's going to be an area that supervisors and regulators struggle, but I think we have to start somewhere,
Yeah.
number one. And number two, I think it is important for us to start looking in the absence of a full legislation, that the central banks and the financial services regulator need to start looking at frameworks for guiding the financial services participants in the space. And that, if I look at Singapore very quickly, they've based it on a principle-based approach. So the humanitarian element, but they call it fairness, ethical, accountability, and trust. That's
Sure.
the principles to build the framework and actually engage with the private sector in sandboxes on new innovations, payments-related innovations, in order to ensure that there is some robustness around.
I love what you're saying, principles that feed frameworks that then shapes legislation. And I think, it's an interesting conversation in light of, the governor's response to say, there is a dedicated sandpit to play around so that those principles can be surfaced that then inform the framework. So table 8, ladies and gentlemen, is on fire. I have another ping coming from table 8. I'm not sure if it's Zinhle again. Zinhle, you should have been part of this panel because I see you grabbing the microphone. So, quick comment before I wrap. I've got 3.5 minutes. 3.5 minutes. I'd love to get your voice in.
Just quickly, the conversation of consumers and consumer protection, what I've noticed mostly is that the consumer's not always taken along on this journey, and I'm hoping this is something that come out these 2 days. But my mention for consumers and taking along the consumers here is that what I've noted and what creates an issue is the fact that when there isn't awareness when it comes to how the consumer is then protected, what happens is that the consumer then has lack of trust in adopting these payment provisions that we are coming up with, or whatever solutions are being provided for the consumer itself. So I think in terms of building building on the consumers' trust as well and bringing them along in this conversation
Yeah.
and actually being clear on quite an important aspect as well. Thank you.
Thank you. It's exactly where we started, where you were talking about trust. You've added to that, Radhika. I've got 2 minutes left. So in the 2 minutes, and thank you for that contribution, Zintle, I want us just to quickly reflect on this. A lot has been said in this conversation. There's a lot of opportunity. There's a lot that's happening in different parts of the world that South Africa could be learning from. But we also know that you don't build Rome in a day, you can't boil the ocean in one go, you can't eat an elephant. I could go on and on with the sayings. My question is, what do you think South Africa should be prioritizing as it thinks about the future of its payments landscape? What's the one thing, I'm not asking for a silver bullet, but a priority that could be followed by others? I'm going to, Stephen looks very ready. So Stephen, I'm going to work my way down like this. And I'm going to ask you to be brief and concise as we get counted down. What should we be focusing on?
3 principles.
Sure.
Proportionality. Regulators should be proportionate when they are dealing with
Yeah.
non-bank providers. Second, technology neutrality. Don't spend a lot of time discussing technology. You just look at the functions.
Sure.
We spend too much time on technology. Number 3, other relevant principles are Basel, FATF, all those standards are very important.
Sure.
So 3 principles that I have highlighted.
Thank you very much. Proportionality, technology, neutrality, and a focus on the standards. I love that, and it's concise and to the point, Stephen. Radhika, where do we start?
I'm going to say it has to be an enabling framework. We have to revisit the regulatory framework, the regulatory landscape. And to Stephen's point about non-banks, new players, fintechs coming into the space, there is a need to revise the South African legislation
Sure.
in order to create this enabling framework for all of the things we've discussed now, whether it's digital payments, interoperability, all of those things. I think that for me, that would be a starting point.
Yeah, I think it's a great point. So in the absence of an enabling framework, everything that we've discussed here becomes ideas and dies as ideas. The enabling framework creates the conditions for those ideas to take root. Harish, as you wrap us up, if you were advising the payments ecosystem players in South Africa, where would you say the starting point needs to be?
Now, I'll make 3 points, and one of them is already made
Sure.
by Radhika, which was on regulation and the legal framework. Laws and regulations take time. South Africa has been trying, this is on the agenda for the last 6 to 8 years now. I've seen countries taking 10 years,
Sure.
but hope South Africa doesn't take that long. So that is the number one. The second one, I think, is services like PayShap, I think, has to really penetrate the entire society. It should work for the Kazi economy, not just for the Joburg
Sure.
economy. And then the third one is, I think, it is important to start looking at all the different initiatives from the view of digital public infrastructure to bring the digital ID and the data exchange framework along with the payments modernization. Thank you.
Harish, did I hear you correctly? Did you say that Kasi? Ladies and gentlemen, Harish is really, yeah, he deserves a round of applause for that. It shouldn't just work for Sandton, it needs to work for the Kasi as well. That's absolutely fantastic. So ladies and gentlemen, laws and regulations, we know that they take time. So how do we make sure that we're able to not sit in the problem for too long and actually try things and put out laws and regulations to the point of an enabling environment that Radhika made, that we are truly penetrating so that we're leaving no one behind, beyond Sandton and into the Kasi. Please can our social media people tweet that? I think that was fantastic. And then we need to make sure that a digital public infrastructure is the backbone that allows us to do all of that. Ladies and gentlemen, won't you please give my panelists a massive, massive round of applause. Thank you very much. And a big thank you to you and to Zintle in particular for participating in that conversation. That's how we want to do it. We want to bring your voices in. We want to make sure that we're reaching that corner at the back of the room and that corner at the back of the room in the conversations.